Okay, just a couple things to talk about from today that I think are pretty good trading lessons. And Trip was one. It was one call I made this morning. Had that huge sell-off, almost 10 bucks yesterday. Then let me add today's candle in, and look, it gaps down and sells off at the open to this 70 that it had gapped up to back on July 25th. Okay, so now on an intraday basis, let me switch to 5-minute candles here. Okay, so anytime you have a big sell-off and then the next day a gap down and it sells some more, at some point you've got, shorts chasing, people chasing this short trying to make money, and at some point you're going to get a reversal. And I call this as simple as the first break of a previous 5-minute candle's high, so 70.18, which triggered right here. Now this one took a while, and I think part of this is August trading. This one took a while to get going, but eventually we ended up, and let me rephrase this, when it looked like this, after we took it here and the stops down here, when it looked like this, I said, hey, you guys, actually it was higher than that. It was on this first pop. Right. It's coming. There it is. Right up in this area, I said, you guys, you definitely want to sell some to lock in some gains. I said, but this has a good chance of going all the way up to the high of the day and maybe even breaking the high of the day because of that big sell-off, and then the gap down in the sell-off, and it couldn't find new lows after that. And lo and behold, it sure did. Right here is the high of day break, and that was it. That was the high of the day. But I said to hold some shares in case this does get to the high of the day. It'd be a good place to sell some. So anyway, Trip. These happen all the time. Something overdone and then the next day sells off again. I usually have the chat room looking for reversals after that initial sell-off. Another idea I had today was UAL. Remember, these airlines beaten up pretty good, and UAL we traded yesterday around 30, and then today again it gave a pretty easy trade here. All right. Here is the opening 5-minute candle from today. So you get a little kind of bottoming, rounded bottom here, and then it comes up near the high of the day right here. But it doesn't take out the high of the day. This is a name that, with that chart, you expect a high of day break to give you a little momentum. But it did something better than that. Sellers came in right here. Okay, now you've got a great setup. If these sellers fail, I want to go long. So if it takes out the high of this candle, these sellers that think it's going to roll over are wrong, and they're going to cover, and you still got the high of day just to the left of that as another catalyst. So I just called it long over this candle here, 30.06, and worst case stop, and I show you right there, there's the trigger, worst case stop below this green candle at 29.87. So not a bad risk reward, and next thing you know, we're through the high of the day. And this didn't exactly kill, right? It went from 30.06 to 30.40 something, 30.41 or something like that, and that was all it could muster. But it was, if you look where our entry was, it was just money in our pocket straight away, right? There's the entry. Never really, and we had 20-25 minutes as it re-challenged or challenged this high. Great place to scale out some. But again, that was just an easy setup and an easy trade. Actually called J.C. Penney's long right about here, and a stop down here somewhere. And it only gave us about 40 cents, but you know what? It was easy money as well. And then let's see, Cree, kind of another scenario of a stock that's really beaten up and then was selling off again today. I'll have to zoom in to show you. Cree, let's see here, put in a bottom and bounced, and then I called it on what we call a secondary 5, sort of a double bottom. It bounced here. I called it long over this candle, which is 57.01, 56.80 stop. So about 20 cents risk. And again, it doesn't look like much, but it went from 57.01 all the way to 57.71. So over this 45 minutes or whatever that is here, a 70-cent move and plenty of time to put some money in our pocket. And you know what? I also want to show you OMC. And this was something I didn't call in chat, but it's a great trading lesson. I did point it out, and then I dropped the ball, because you should always, if something is getting what we call a PFPD, we have our own language in the chat room. If something's getting a PFPD, and that stands for potential final push down, okay? And that just means, well, this isn't very good at drawing. Let me try lines instead. So you're already beaten up, right? Then you have this long base, and then you start selling again, okay? Just loosely connecting the tops of the candles, but then you can see a shape change here, and usually that's accompanied by increasing volume. So this shape change usually marks intraday capitulation or a possible intraday bottom. Okay, and if I show you the daily, I'll slide the daily over here and pan out. Whoops, I'll pan out a little bit. You can see that it had resistance at 60 back here and then support at 60 here. So we're getting shape on 5-minute candles into an area of support on the daily chart. That's a great setup to look for a bounce. But here's where I dropped the ball. I ended up getting called away for a meeting and never did get to trade here. But I would have probably taken that on 2-minute candles. But more importantly, you know you're potentially bottoming here because of the PFPD shape. And then look what happens. This is something everyone should learn. All right. All of a sudden, it comes down and takes out the... Now, where do you think all the stops are from this potential bottom? They're all right below these two candles. And look what happens. It comes down, takes out the stops. See the increasing volume? That's a perfect stop run, what we call a stop run in chat. And a first break of a previous 5-minute candle now, especially over this little doji, 60.33 with a 60.22 stop. Now, I want to be clear. Look at that. All the way quick 60 cents over the course of 25 minutes or so. I want to be clear. I didn't call that. I had this on radar, got called away, but that is a perfect what we call secondary fives after a PFPD. And man, that it doesn't get much better than that. And I only show that as a trading lesson because these things do repeat themselves. All right, so I'll quit babbling and talk to you later. Have a good night.